All righty. Good morning, traders. This is Blake, and Dale is not here. Now, sorry, I just had to mute my TV. I'm not going to guarantee that he won't be here today. He might actually be here. His internet is down. Then he's like, "Oh, my internet is up." And then he's like, "Oh, my internet's down." So he's dealing with obviously internet issues in his area. So hopefully he'll be here. If not, he's got it. He's got Michelle Snyder. She's coming in from Market Trend. Is that shoot? Where is Mish from? She's a Market Minute. Excuse me. Mish Market Minute, but she's from Market Trend. Anyway, she'll be here a little bit later. I might have to interview her. Depends on Dale's internet abilities. Anyway, a couple things before we get started. As you guys can see, this is the ForexAnalytix chat room. If you guys don't know what the heartbeat of what we do really looks like, this is it. You know, ForexAnalytix is what most people see. Here, let me move this out of the way really quick. I'll just put it on the I'll just put it in one of these tabs. What most people see about ForexAnalytix from, afar is they see, oh, you got analysis, you got all this different analysis, you got charts, and you got all the headlines and earnings that are coming out, and risk management tool, and options pricing, live options pricing, so you can know what the currency volatility is. You got all the options that are expiring throughout the course of the day, and at what price and how big it is. And then you got the bias chart, which kind of gives us what the key levels are every day. That's done with all of our traders. But what you don't see is the chat room behind the scenes. And this is what we do all day. This is where you're going to find myself and a lot of different traders talking all morning. I mean, this is over the last hour, is basically all these charts and what we're talking about, and all these side conversations that are happening inside of these charts that you see here and behind the scenes. So this is what we do. And remember, if you want to be part of ForexAnalytix, try it out. This is a closed community. I had one of my friends, well, from the Northeast, if you will. He's a friend of a friend that used to trade, of the fund that I used to trade at. He was on a flight yesterday, so we're going to talk today. And you know what he said to me? I'll read you his exact message to me, minus the curse words. This is what he said to me yesterday. And he's one of the bigger traders I've met. All right. He goes, "I am so sick of people talking on Twitter. I really get nothing in return." He goes, I love chatting with people that, trade the markets, not say I'm a great follow, but I just want to be around smarter people. So I'm gonna basically, he's like he actually was the mentor of one of the biggest traders that I've ever traded with, like biggest as far as size goes. So I'm going to have a conversation with him a little bit later today, because that's what the ForexAnalytix community is. It's like it's a closed off community where we talk at markets, and no politics, no. It was unfortunate, the whole like the last election cycle. We actually had to remove somebody that I still follow on Twitter, and is a really very knowledgeable market person. I actually had to remove him. We did, because of his political comments in the chat room. We try to keep it really clean, no trolling here. It's nobody sells anything. It's just, we talk about the markets, and that's what it's all about. So anyway, if you want to try out ForexAnalytix, you should. It's only $1 for 10 days. Why not do that? Check it out, jump in the chat room, see if it's right for you. And it's not just the chat room that you see here, the general chat room. You got the Flowonomics room where you're going to find Ryan and Kman at mostly, and all the smarter guys, right? Ryan?
I wouldn't say that, but
Yeah, you guys are all the macro people. You guys are all the thing. You guys are the people that have figured out how to conquer the world, and the rest of us peons are going, huh?
that's just you trying to understand football, mate.
Yeah, that's right. That's exactly what it is. Hey, anyway, good morning, Ryan. Good morning, K-Man. How you guys doing?
Morning, everybody. Morning, Blake.
And Forex Gal says size does matter. I'm glad it's the Forex Gal that says that. And you know, that's not what I heard. I heard it's the motion of the ocean. Okay, I'm sorry. I'm on a completely different subject. Good morning. So let's talk a little bit, guys. Here we are. We've got some data coming out. We have advanced GDP. We have earnings coming out. We got Google. We got Microsoft today. I'm going to take a look at some of those stocks, kind of look at what's happening in some of the equity markets as well. But we have advanced GDP today. We have unemployment claims. We haven't seen any real move from an employment point of view. And by the way, I mean, when you're looking at employment claims, that's like our leading indicator to see if we're gonna. It's our most real time read, if you will, on labor force. And I mean we've been at 200,000 initial jobless claims for God knows how long. I mean, we got to 260 at one point. I remember it kind of freaked everybody out, and I guess that was maybe the end of last year. I'm guessing here. Maybe I'm looking even further. Maybe it was it was last summer where we got up, where it got a little scary last summer, but I mean, we've got that coming out today, so we're not expecting a lot, but we also have the BOJ tonight or tomorrow morning in Asia, and everybody's talking about the BOJ. Everybody's talking about the yen. So let's start off with Ryan. And Ryan, what are you feeling out here? What are you seeing out here? What's got your attention at the moment?
Just what's going on in the yen, and every day we've got another. I wouldn't call it a piece of the puzzle, but another jigsaw to unravel as to what they're going to do. Yen's had another break lower. Yen pairs all ramming higher. Is there a big driver behind it? There's nothing fundamental behind it. Yields aren't doing much about it.
Yeah.
So the buttons are getting pushed at the Ministry of Finance. I'm just actually answering Matthew's question in the Q&A. He says, as a lone trader, I love this meeting and the opportunity to tap into a broader community and benefit from your unique insights. Would it be possible to today discuss the potential ramifications of intervention from the BOJ? First thing I'd like to say is we had a big, long conversation, as we have been all week, on intervention on the Flow show. So we probably haven't got time to do it here again. So wait for the recording to pop up for today's Flow show.
And by the way, I just need to interject that recording usually comes out about 2 hours from now. So
yeah,
there you go.
Plenty of time still, but we went through everything on intervention in that. So check that out later. As I say, I don't know if we have time to repeat all that before the guest later.
Okay, yeah, and so how about this? We've talked, up and down, back and forth about the yen, but let's talk about like the dollar. I mean, the dollar, you can see I'm just drawing out a very simple bull flag pattern so everybody can see it. I mean, it's been drawn on this chart. You guys can see like ultimately the dollar. I'm still looking for it to potentially, as long as bull flag stays intact, we stay above 105. We're looking for a move above 107 and change, and probably more up to 109. I still think that the US data doesn't look horrible comparative to everybody else. The only thing that's different is now everybody's figuring out that CPI, yeah, it is sticky here in the US, but it's also sticky everywhere else. But anyway, before we get too far into that, how are you feeling about the dollar right now, K-Man? I mean, dollar index, it's coming off a little bit right now, but the euro, I mean, it's not like the euro's gone very far from tagging 106 a couple of days ago, right?
Yeah, I think what we saw, okay, there's been a bit of a reaction to data, what we saw, but I think the main thing happening right now is that people are worried about a dollar yen intervention upcoming, and they're managing their dollar books a little bit because assuming that we get a simple intervention, because there are different intervention possibilities, right? If we get one, that is, but assuming that we get a dollar yen interventions, the rest of the dollar pairs may weaken a bit, the dollar weaken a bit, just in sympathy with the dollar yen being pushed lower, and I think that is what's happening now. And as I was saying on the flow show as well, if I see, I'm going to take the US data today and tomorrow as one package. But and again, in the assumption that we already will see an intervention, I think that if I see such a move in the dollar in sympathy with any dollar yen interventions, and all US data are staying where they are, or getting a small beat or so, I'll be a dollar buyer on dips in other pairs than yen pairs. And one particular one that I'm eyeing very closely is the dollar Swiss, because my view is that if they intervene in the yen, if the market turns around and says, okay, we can't sell the yen anymore, and now we are going to concentrate on the second cheapest one, funding wise, and that is the Swiss in this case.
So I can look. Can I? I'm gonna make it. I'm gonna make it more visual for people so everybody can understand, because I've been through not as many interventions as you, Kman, but
Not a few.
but yeah, because you've traded through them. I've traded through them because of where I live. Being a North American trader, I know a lot of Europeans are usually asleep when some intervention efforts happen. I just happen to be around when a lot of them are going off. Anyway, so I can explain to everybody what it kind of looks like in a sense. Like when you have, let's just go over to the dollar yen. I'm going to put the dollar yen right here, and I'm going to do a little bit of drawing. And over here, I'm going to put the euro, and I'm going to put that on a 4-hour chart. So, for example, let's say we saw a Ministry of Finance intervention, and we see this move. Dollar yen drops. Well, let me move that out of the way. Okay, let me redraw this. Just redrawing this. So let's say we get a move that looks like this, and we go from 155.50 down to 152.60. Let's just say that's what happens, right? You see a quick move like that down. What you're going to see in sympathy, what Kman's saying, in sympathy, the euro might actually go from 107 and a quarter, and it might actually jump to 107.80. Right now, when that's happening, just because you see the dollar is moving in sympathy, you're going to see the euro moving up in sympathy, or just as a more of a cross rate effect. The euro yen's actually dropping at that point in time, probably several hundred pips as well. So what Kman's saying, and you can elaborate from here, is if you see like the dollar Swiss, dollar yen comes under pressure, people look at the dollar Swiss, and you're going to see the dollar Swiss kind of drop a little bit. You actually want to use that as an opportunity to be on the long side of the dollar Swiss. Is that correct?
That is so.
Okay.
That is so. I mean, unless the US data start to show too much weakness, of course. But that is exactly it. The magnitude of those responses will depend on how interventions are conducted, how hard they come in the market. Do they want to make sure that the speculators are disappointed and chased away? It all depends how. But yeah, that is exactly it. And I'll be especially looking at the cheapest funders, and that should be the ones that rebound later, than once the interventions are over, and or once the market has a clearer view on what they want to do and how they want to conduct them. Euro dollar may be a spicy one, because it all depends on whether Bank of Japan, yes, will be on after given the order by the MOF. It all depends who is involved. If Bank of Japan goes on its own, or if they involve ECB or the Fed or so. Because if ECB gets involved, then it's going to be a right old mess, because they are going to sell euro yen, because they are based in euro, in the eurozone. For the Fed, that's not the issue. They can just do dollar yen on order of the Bank of Japan, on behalf of the Bank of Japan. But I've seen an intervention where the ECB sold euro yen, and then the euro dollar dropped actually, and then they went to one of the European banks and sterilized all those euro dollar sales, and euro dollar ramped higher to 300 points. So if they get involved, then it's going to be a real mess. But I think that's why I was saying, like, rather look at something like the Swiss franc also to
Yeah.
concentrate the efforts on.
And it may give us those opportunities to buy, or to sell Swiss francs on any rally. I mean, that's like the overarching theme that I think a lot of us have had in the ForexAnalytix community over the course of the last, several months. So just look for those opportunities to take advantage of. One last thing, AJ mentioned, I don't think there's going to be any intervention today. Look, the BOJ is coming up tonight. We got Tokyo CPI, and I don't. One last thing we should mention here. And I can let Ryan and Kman address this as well. I really don't think there's going to be any action today from the BOJ. I don't think they're going to make any moves on monetary policy. So, and if that happens, the yen's probably going to weaken a little bit further after that. Intervention efforts would come after the BOJ, if in my opinion.
Can I just answer AJ as well, because he's another
ahead.
one mentioning PCE data.
Yeah.
The MOF, BOJ, they don't care for US data.
Right.
They're not trading US data points, okay? Yes, they look at the overall trend. That's what happened the last time they intervened. We got that turn in the data, turned by the Fed. That helped.
They're looking at this.
That was a bonus. That was a bonus. So
they're looking at this, right?
Yeah, they're not going to trade the PCE data in terms of intervention, because they could do that, and then next week we get the Fed and the NFPs and whatever and CPI, and the next piece of data goes the wrong way for them. So they're not going to intervene in between data points. Just want to make that clear. They're concerned about what happens with the level of the yen and what's driving it. If it's the US driving it, they know intervention is going to have less effect. If it's speculation and volatility, that's when they want to step in.
And there is absolutely no speculation going on with the there's no speculation going on right now with the yen at all. That's a joke. That's a joke. And I want to show you how much of a joke that is. If you look at the commitment of traders, and you take a look right here at the large speculators, and you see how aggressively short they are, you can go back, max time, and they are the most aggressively short as far as COT data is concerned ever. So if you don't think there's any speculation on yen shorts right now on a positioning level from an institutional level, that's incorrect, based on the data that you see here from the commitment of traders report. So I think that the level of speculation right now is extremely high. So anyway, Kman, any last minute words before we go? We should cover a few other things.
About the yen, you mean, or
yeah, any last minute words about the yen before we go cover a couple other things?
Yeah, really, for traders, I mean, if you don't have to trade if you don't have to trade it, if you don't have like a big position open, I'd wait until we really see what's going on, and then pick up the pieces. So my finding is, on this intervention, if they want to break the speculation, they will have to put it under 150 in the dollar yen and keep it there. If they don't do that, and in the assumption that the Bank of Japan does not move, then it's going to be extremely hard for them to keep it to keep the yen strong. Now, if you want really my last minute thought, I think the risk of Bank of Japan doing something has increased due to the near or the trade rated index of the yen just collapsing versus everything. The speed in the dollar yen is not there, but in all the rest, the yen has weakened dramatically. So I would not rule out completely a Bank of Japan move overnight.
Okay, thank you. Okay, thank you very much. I wanna just really quick point out that here's Meta. Check this out. They reported yesterday, and look where we're trading pre-market. Basically filling a gap from the last earnings. So we had last earnings, Facebook rallied quite extensively. I keep saying Facebook, but Meta. And then here we are gapping down towards the breakout point. If you don't follow Nick over at Trading Analytics, he did a video yesterday afternoon saying is Meta ready to fall 17%. If you guys aren't following Nick, I'm going to put his Trading Analytics profile. I'm going to put him in the chat box right now. Make sure you follow him. He's a great follow, especially for those of you that trade, you know, not just the Mag 7, but you trade equities and kind of understand like some of the broader market ideas that are out there. He puts together a few videos throughout the course of the week. Make sure you follow him on Twitter. He's a great follow. He pops in here every once in a while. When he's mostly focused on equities. But speaking of equities, we also have Microsoft that's got earnings today. I was just on Microsoft. Where is it? Okay. So Microsoft, I want to show you guys this is a very important chart to me. Microsoft reached for the 161% extension, back here at the beginning of the year. We struggled. So now Microsoft is very similar to me to equities. We've put in a near-term high. When I say near-term, that, I think this is going to stick for a while, but I think you're going to get two-way action. So while you're above here, you're above this 380 level, you're probably going to see two-way action, right? That's how I feel about Microsoft. We'll get further direction on a breakout above the 161% extension or break down below like 380, somewhere around there. But we happen to be right smack dab in the middle as far as Microsoft goes, and we have earnings today, and it's going to be a big driver of the market. Is it Microsoft the biggest stock? I don't know, market cap wise. It's close, right? If it's not there, it's close. We also have Google, which is another big one. And I don't know why I don't have it here, but I'll take a look at it. So we have Google that is also reporting. And if you take a look at Google, we are up at all-time highs. So just keep that in mind, because this is definitely going to be a driver. Google's big because people want to know what it's kind of like a early warning system, feelers on the business side of the economy. So if you see Google ad revenues going down, that small businesses are tightening their belts a little bit. That's why I think it's one of those that you got to watch from that point of view. Again, we are at all-time highs, and we are holding all-time highs. A break back below 150 would be really quite bearish for the stock itself, and could really have a broader based effect on the market. Now, they're not the only ones that are reporting today that we've had. I mean, you look around at earnings have been pretty good. I mean, expectations may have dropped, but companies continue to come in better than expected. So you got to think about that when you're dealing with equities as a whole. When you have earnings, it's hard to see stocks come down aggressively when earnings still look not bad comparative to what expectations are. It's when you see a majority of stocks missing earnings. That's when you really get a downdraft in equities. We don't have that right now, and we don't have a weak labor force either. So unless you get those two components, seeing the stock market drop below 4,800, which I know a lot of people are just hoping that happens, it's hard to see, at least right now. So as you can see, we probably, like I said, with Microsoft, stock market's probably pretty similar. We're in some two-way price action. You're going to see, dips, propped up probably towards 4,800, and you're probably going to see rallies sold up towards 4,200 or 5,200, and that's probably going to be the market moving forward, as we go into summer. Now, we are coming into a more seasonally rougher time for equities. So, maybe we see 4,800 before, 5,100 again or 5,200 again, because, you get the sell in May, go away type of activity, especially after such a big run in equities. But it's just something that I think we should all be keeping in mind. All right. So Ryan, we have data coming out today. What is hot on your radar aside from the yen? Let's not talk about yen anymore. What else? You got sterling up at 125. You got euro back at 107 and a quarter. What's on your radar today as we have advanced GDP coming out?
Yeah, GDP is the main one. There's a lot of chat around the bloody PCE stuff, because obviously this is Q1 data, which is estimated for March, because we've not had all of March's data, but tomorrow we get March's PCE numbers.
Yeah.
So there's going to be a lot of extrapolating between the PCE we get in this and what it means for the March number tomorrow. So the GDP number is usually, the first number is usually the most market moving, unless there's a big variation in the revision. So yeah, we're going to be, are we in soft landing mode? Is it going to be a bumper one, or is it going to be a little bit softer? And obviously we're going to then extrapolate the Fed, what the Fed's likely to do and how they're going to speak from that. So good number, dollar rallies, bad number, dollar gets sold off.
So pretty binary here. And then also we have to imagine this is the advanced GDP numbers. So we don't have a lot of components. So this is where you get a little bit of risk of a way better or way worse expectation is some of these advanced numbers, because they don't have all the components to factor in for final GDP. Kman, what are your thoughts here going into today? What are you looking at?
Yeah, we do have one hint at what it may be. That's the Atlanta Fed now, but they change their view every day. So yeah, I mean, again, all else equal, I'm going into those next 24, 36 hours with very reduced risk, but I'm ready to press some buttons. It's hard for me to straight go and buy dollars here right now, but it's still my overarching view is that the dollar should do well just based on everything that goes now. And I'm perhaps next week the jobs report will tell me any different. But in the meantime, I'm still rather a dollar dip buyer than a rally seller. But again, I mean, it's hard not to talk about the yen, right?
Yeah.
So that is a very, very big risk factor in everything that goes on right now. I would buy one, which is another one, which is also actually quite close to the yen, and I think that's dollar CNH. If I see a dip there, I'm going to be very interested in buying that.
All right. Well, the dollar CNH is something that we'll cover actually on the morning edge, which,
okay.
Yeah, I'm gonna cover it because we don't have the time right now, and that is a private show for ForexAnalytix traders. So I'll talk about that in about 45 minutes with the group. Hey, real quick, I've got 10-year yields, 15-minute chart right here. S&P is going to be off to the left. I'm going to put the dollar index right over here to the right, or to the far left, excuse me. I don't know my left and right at 5 o'clock in the morning. And I don't know if Dale's gotten here yet. He has not. So it looks like I might have to be doing the interview with Mish, which I don't have a problem doing. So let's see here, because I know her pretty well. Here's the dollar index, and let me put it on a 15-minute chart, and let's get that. There we go. So here we are, and let's pull this over the data flash now. With the data flash, I'm going to just keep an eye on some of the currencies here. You can see here's the jobless claims, the advanced GDP, trade balance numbers, and watch this GDP price index too. That might be a mover as well. Obviously, we're looking for a tick up there. So data should be out in approximately 5 seconds. Here we go, guys. Stand by. Brace yourself. Here we go. Initial jobless claims better. Continuing claims better too, and revised better. Do you guys see advanced GDP?
Ooh, lower.
1.6.
1.6. Oh, wow. That is, I don't see it here, so that means it popped up elsewhere. But
For
man, that's
PCE,
not.
3.7%.
So the prices are
Prices up.
higher.
Expectations.
Prices are higher. Correct me if I'm wrong. Prices are higher,
Yeah,
but weaker numbers, and that's a we call that stagflation, right?
get in there.
Getting there. I mean, we're getting there. I mean, it's that, and that's scary as it is. So, interesting. All right, we got a little bit of volatility, and I think the market's having a more difficult time reading it as far as currencies go, and same with yields. But the stock market doesn't like it. I mean, higher prices, lower growth, not good news. The dollar seems to be responding very positively after a quick knee-jerk reaction. We're seeing the dollar tick higher. Ryan, before we bring in Mish, which I'm going to go find her right now, any I'm doing that just as we speak. Any last minute thoughts before we go?
Yeah, that's a bit of a mess. That's going to take some sorting out. That slightly weaker growth and the hot prices. Yeah, I don't know what it does here, so I'm just going to be glued to the screens and see what side the market wants to take on that.
Sounds great. And Kman, any final thoughts before we take it over to Mish?
Yeah, a little bit weaker on the risks side of things, I would say globally. Dollar is responding that way, actually higher on a lower risk number. But I'm not sure for how long it lasts. This particular one, I think we see a bit more of a yo-yo move this afternoon on the back of this.
As you so fondly like to call, the saloon doors may be swinging today,
Yeah,
right?
exactly. Saloon doors freshly painted. Just watch out.
All right. Well, hey guys, I want to thank you for keeping me nice and a great company today. I know Dale, and I'm sorry, Mish, I am not going to put on my video today because my hair looks like I've been through a wind tunnel this morning. So we're going to have I'm filling in for Dale today. His internet, he's struggling with internet. We all have internet issues, and he's having them right now. So Ryan, Kman, you guys, thank you so much. For everybody, if you don't listen to those guys about 3 hours ago every day on the Flow Show, just go to the ForexAnalytix website, go to where it says webinars, and the first link you're going to see here is the Flow Show. You can get the times, the registration link, so you can communicate with Kman and Ryan directly through chat as they're talking and doing their show. Really great show in the morning. I wish I could get up at 2 o'clock in the morning every day to watch it. I know a lot of people in the United States do, but it's a great European trade show that gets you prepared for the trading day. So thanks, guys. Appreciate you both. All right, Michelle. Michelle Mish, how are you?
I'm good. Good morning.
So let me first of all, I'm going to be the first one, just because I got to meet with you well, I didn't meet with you last time, Dale did, but I had you on the Trader Summit, and I asked, give me one big call, and your big call was get long silver, and that was like $23 maybe, if my memory serves me correctly. I want to say it was right about here, and we were getting close to triangle resistance. I remember because I was like, I don't know, I'm gonna wait for it to break out, and you were like, nope, silver is gonna break out, and lo and behold, we got about a 20% move. It's obviously pulled back just a little bit, but great call.
Well, thank you. And I think I heard you say the word before I came on, stagflation.
Mm-hmm.
Yeah, and it's a word we've been tossing around for a couple of years now. And of course, these are the kinds of words that are scary because it is the worst situation for the Fed to be in, but they've kind of been painting themselves into a corner. So it's not really surprising now that you're starting to see people say it in the mainstream. I've even seen Jamie Dimon say the word now, not that he's any great authority since he seems to change his mind weekly, but nonetheless, yeah, it's kind of looking that way, which is one of the reasons why I like the metals at that particular time, and still do, by the way.
Okay, so it's a great segue into in your opinion, I mean, this is, you think about stagflationary environment, and even though I've been in the markets now for almost 30 years, 25 plus years since I've been on trading desks. You've been around longer. But the reason why I say that is because your experience speaks volumes here. How are you going to position yourself? Let's forget precious metals. I think everybody's on the same page as you. How
Exactly.
else would you position yourself for a stagflationary environment? How else do you think the market's going to respond?
Well, we're already seeing a little bit of a rotation into value from growth, and clearly Meta earnings was one result of that. Netflix last week, which was another one of my bold calls, I wrote a daily in March that said that Netflix was topping and was probably a great short. And the reason why is if you think about a stagflation environment, and even with these growth companies, they have to find some level of valuation. And also, in order to keep up and be competitive, this is exactly what Zuckerberg said, is they're going to have to spend some money. And so I think that AI obviously is, not going away, but it's kind of like EVs aren't going away. They're still the future, but yet we saw Tesla still trying to figure out what reality is for in terms of what that company is worth. And I think we're going to see the same thing with growth. So I wouldn't say I wouldn't be a buyer of growth, but I would not expect the type of returns that we've seen in 2023 into the early part of 2024 in that area. Where we could see more returns would be, I think, first of all, I'm looking at some emerging markets, especially emerging markets that produce commodities, because I still believe that we are a world that has been caught short enough raw material because producers with cheap prices have pulled back for years. COVID obviously was an extreme example, but still, even since COVID, with geopolitical situation, this is what we're seeing, is that there's questions. Is there enough copper? Is there enough oil? And so on, forth and so on. Is there enough aluminum? I mean, even you've got some of these little base metals. And so I'd like some of those companies that are producers, some of those countries that are producers. And I have to say, I'm very commodity focused. And the good news is if you don't want to trade futures, you can actually look to trade ETFs, made it pretty simple. In terms of company stocks, I still like some of the defense stocks, particularly cybersecurity. And I do think that the consumer is changing. This is the last thing I'll say because I don't like to talk too long, and we can certainly do Q&A here with each other. But I've really been into this whole notion. I'm going to say I coined the phrase the vanity trade, and I haven't seen anybody else use it, but it'll happen where the consumer, and I know there's been some controversy today that came out about Ozempic and the pricing. This is exactly what I think is going to happen, is that these diet drugs, they're going to have to become more competitive and more mainstream affordable. And when they do, I think that, considering that we have a tremendous obesity problem, and we have had for many years, and it's only gotten worse since COVID, people that will turn to these drugs will become a new vain consumer of skincare and makeup and hair products and anything else that's going to make them feel good about themselves. So the spending goes from which we have seen as the initial thrust in the consumer after COVID, to me, taking care of me. So those
Well,
are
Estee Lauder never looked so good on you, right?
Estee Lauder, Elf obviously has been a hot one. I mean, even some of the other companies like Coty, but even the companies themselves like Novo Nordisk, AbbVie, which by the way specializes in fillers and Botox, which, I mean, I know this sounds silly to maybe to a male audience, although I know a lot of men who also do this. But if you think about it, if you can finally lose weight and keep it off, you're going to say, my skin is sagging. What can I do?
Yeah.
That kind of thing. So
That makes
that's
sense.
yeah, that's what I've been excited about. I think you have to time your way carefully. Obviously, you don't want to necessarily buy into a declining market, but we know that at some point they're going to look really interesting, and they're still holding up better than most of the other stocks.
So what happens though if Oprah, the spokesperson here, she grows like a second nose or something on her forehead? I mean, would that throw off the balance of some of these? I'm just joking. I'm obviously being very sarcastic here. All right, so that makes a lot of sense. I love how you're putting it all together, Mish. We had one of our traders, Forex gal. She asked, "Are you going to show any charts?" You're more than welcome to show some charts that you're looking at. But before you do that, I want to ask you this: if you want to, it's not mandatory. You can just point me in the direction if you want to as well. I want to ask you about the commodities market, because what we've seen in commodities, going back to your earlier comments talking about some of the producers, but if you look at the commodity indexes, like let's look at the here's the Reuters commodities, core commodities index. We're breaking out. It's a pretty significant breakout. The Bloomberg commodity index looks like it's trying to forge a bottom here. They look primed and ready to go. And so going back to your macro thesis, prices are going to have to rise, and and for companies to stay competitive. Or does it go the other way around, and do we get companies cutting costs to stay competitive, to stay afloat? What are your thoughts there?
I think we may see a little bit of both. And also we have to factor in interest rates, right? Because that's a huge part of this whole equation. And with the higher for longer, which clearly seems to be the case, but that doesn't necessarily mean that the interest rates are priced right for the type of inflation that we could get if we are caught short raw materials. And then, of course, that would beg the question of which way the Fed goes, right? Do they want to protect the economy and potential recession and not raise too much, or at the result of possibly seeing inflation get a little bit more out of control? But to get to your point, yeah, I think you have to look at companies that have pricing power. Obviously, growth companies. When I say growth companies, I don't necessarily mean growth stocks, but companies that are really basically have strong balance sheets and in their earnings show potential for growth. And that's exactly what we're seeing the opposite of so far with Meta and with Netflix. And of course, it'll be interesting to see what happens with Microsoft and Amazon.
Sure.
But really, I think you'll have both. I think you'll have companies that will be able to factor in the higher prices, and consumers, which is really where it all gets down to, will continue to buy those things, hence staples, hence value. And the companies that cannot keep up with pricing power, obviously, we'll have to cut courses, like Tesla, classic example, in which case we'll start to see some issues with that type of company's stock.
Okay. All right. Fair enough. Did you want to show any charts? Again, it's not required.
No. I'd love to show one chart in particular. Well, actually,
Yep.
a couple of charts, because, I'm all about the macro, right? So let me just get
You're
to
all
the
about the macro, but you're also about the technicals, and that's what I love about you, Mish.
Well, thank you.
And you happen to be a New Mexicaner,
I
which
am
is
a New Mexicaner. Yeah.
very close to where I live. So I love that. Matter of fact, my son's soccer team is going to be in New Mexico this weekend, but we are going to have to skip it because it's prom weekend. But
Oh,
yeah, I
oh,
know.
wow. So both
I
your
know.
kids have stuff going on. Yeah.
Yeah.
All right. Well, I wanted to show I've been featuring this chart in my dailies for the last really basically 3 weeks as we watching the progression. And obviously today's pricing is not in because the market hasn't opened yet, but kind of put it into your cap. These are weekly charts. This is by Economic Modern Family. And for me, and for many others, happily, after all these years, the Economic Modern Family has been a great story to tell about the market. And so we won't spend a lot of time on each, but I'll just say that what I had noticed is that we had these weekly sort of trading ranges throughout March and into the beginning of April. And those all in every single area, except for one, broke down. But interestingly enough, after they broke down, and so I started to say caution in the market here in my dailies, looking at XRT, granny retail, of course, so important to GDP. But what happened was XRT fell right into the 200 week. So this makes it so clear. If we cannot hold this 200 week moving average, then clearly we have to find another level. Next support maybe would be down around 67 at the 50 week. We don't know, maybe a little bit lower. But I would think at that point we would start to think that, yeah, maybe we're at a better place to start buying as opposed to right here. I would only be a buyer right here, aggressive buyer of equities, is if this really holds up and starts to creep back up, say through 73 and then 75 back into the channel. So this is a choppy zone, and that's why people are getting chopped up. And then in terms of the Russell 2000, the same kind of thing happened. It didn't fall quite as fast as the retail did, but small caps did fall. And again, held the 200-week moving average. So far, what we're having is an inside week, which is great. I mean, for me as a technician, that's like a dream, because really all you have to do is be extremely patient and say, okay, we get through last week's high back into the channel, buy small caps. They look great. Opposite, of course, we break that 200 week. Here you can see the 50 week is closer, but getting down to around that 188 level, which is kind of where IWM broke out from, makes sense. And IBB, of course, has been the biotech has been the weak link all along. And none of these, by the way, cleared above the weekly channels, but you can see this broke down and broke the 50 and is also having an inside week. 125 for IBB seems like a good level, but we won't know that unless we get back through the 50 and really back through 130.
Can I ask you a question? I want to just add right here, because you're talking about obviously the IBB. At what point do you shift your focus and say, I don't need to be buying things anymore? Where's that level for you, and what would you be looking at where you're like, okay, I need to actually sideline myself on the buy side and be more focused on the short side of the market? Is there something that would trigger that type of idea for you?
Well, it's already triggered for me in the growth stocks. This is what I was saying, is I put out this bold report on March 15th that Netflix had topped out.
Right.
And yeah, so in terms of that area, you already had opportunities to go short. And I still see a lot of analysts who just, basically are a one note. Yeah, AI is the future. You got to buy these dips. And as I said, the people who were buying dips in Tesla have gotten hurt. And the same thing could happen with Meta. We don't know. Obviously, the other companies haven't reported yet. It'll be interesting to see. I would say if I had a bet on one of them as a more stable, it might be Amazon. But then again, Amazon gets a lot of their cheap products from China, and that's a whole other story we won't get into. So what I'm really saying is I'm already not necessarily looking to buy equities at this point until it proves to me that it can hold. And if these levels can hold, yeah, we might have a better short-term type of short scenario, or at least, go more into cash, which isn't even that bad, really, if you think about it in terms of fixed income, because you're still getting about 5.5%. So, this is a whole new game, because people are so used to buying the dip, assuming that the Fed is going to come into the rescue, 40 years of accommodative Fed policy, right? And those days are over. So I think this is a much more interesting, but also for people who aren't as experienced as you and I, maybe a more dangerous game as far as the classic buy the dip. And again, we're talking equities. So I really love the opportunity. Rather than focus so much on where do I go short, I think you got to really look at a lot of the commodities. And I've been very vocal about it on Twitter. I said, buy wheat. Wheat has gone straight up. Watching natural gas, but not yet. Watching sugar, but not yet. But buy silver, buy copper, buy gold, buy miners. And I'm watching uranium. I'm watching lithium. I'm watching aluminum. I'm watching all these things. They haven't necessarily given me the signal, but that's where you got to find new tools in your toolbox if we're going into stagflation, and it may not necessarily be companies.
Mish, when I got my Series 7 in 1995. And I know you were already, on trading floors and whatnot. That's when I started in the business, and we were very much at that point in time, it was a stock picker's market. And I know in today's world, it's very easy to have passive funds and just to be long the S&P and long, whatever, and not really taking much initiative to having choice in the matter on what you're buying or selling. And there's been a lot of debate surrounding that, that time is long gone. We are back and going to be in a world where you really have to be more selective in where you're putting your money. And that broadly would tell me that we are going to be more range bound in the years and decades ahead versus what you've seen during this boomer period in the markets over the course of the last, 20 some odd years. What do you have to say about that? And do you agree with that idea?
I do, actually. And particularly, again, I know I'm really beating up on the growth stocks here, but particularly the growth stocks. And I cannot say enough how dangerous it is. I coil when I hear these analysts who have looked like geniuses over the last several years, although in 2022, that of course was much tougher. But as we were ending 2022 into 2023 saying, these stocks are undervalued and they're a buy. Yeah. But now they're so overvalued. And the bigger question is exactly what you just said, which is we don't really know exactly what the value is. And they can be range bound, as we've seen in the past, for quite some time until things move into a new direction or a new type of economy. And everybody thought the new economy was AI, and it still is, but that doesn't necessarily mean that these stocks go up forever. And
Yeah.
so I agree with you. I mean, it still will always be a stock picker's market, and there's still always a bull market somewhere, as we know. But the major themes that we came into with AI and EVs, I think EVs have already shown that they're having issues really getting into mass adoption because of infrastructure, et cetera, et cetera, et cetera. But now I think we're going to see the same kind of issues with these companies that are AI generated. AI is here, no doubt. I use it, most people use it, but not everybody uses it. It's not like a staple. So I think you got to really be aware. And in terms of the rest of the market, I mean, if we just kind of quickly finish the chart here, I think it'll give you some ideas.
Okay.
Biotech could be something valuable. It could be. And that's why I like to look at the chart. But right now, it's just showing after tremendous weakness that it's catching its breath. Does that mean it'll get new air, getting ready to exhale? We don't know yet. Semiconductors, you can see, is much stronger down below that. I'll put my cursor here under the channel, inside weak, but it's not getting back through the channel. And if we cannot get through there, this only proves my point of what I'm saying. We could see companies like NVIDIA and other chips companies and AI related companies sell off more. And transportation, same thing, stronger, but still showing more of a decline. And then finally, though, on the opposite side, so we have two potential opportunities, right? We're saying small caps, maybe, if IWM can get through 200, maybe IBB if it can get back through 130, maybe Granny, although I would be less inclined to think. But regional banks, to me, have my biggest interest right now. I had mentioned that they never broke the bottom of the weekly channel. They've been in this 45 to 50 range for seems like forever. And they touched on the 50-week when we had that big sell-off last week. And now they closed up on the week, and now they're getting follow through. And even today with the market down, they're still not down that much, which tells me that we could see a shift in the whole commercial real estate thing, which I don't know why. It doesn't make any sense to me. But from a technical standpoint, it could mean that we'll see an opportunity to be able to buy at least KRE, if not some of the regional banks. And then, the narratives of fundamentals always change after the technical setup. We know that,
Sure.
right? So that's kind of how I'm looking at things right now. And the other thing I wanted to show you guys, because, I'm huge into the junk bonds, is these junk bonds. And I'm sorry, I don't have my white chart set up here, but what's interesting about this is that this real motion indicator we have here, which I'm having a little trouble getting blown up. Essentially, you can see it's the dots, red dots are sitting right under the 200, yet this is above the 200. So we're getting a little bit of a bearish divergence. This is the 6-month calendar range low, which we broke, got to the 200-day, and now on yesterday, 2 days ago, we got above it, and then yesterday we started to sell off, and now look at our bid offer on the opening here. It's pretty far, 75.26 to 76.40, won't come in that low. But if this breaks down under this 200-week moving average with this declining momentum and this huge top, look at the range that we've had basically sideways since December, then I think you have to be careful pretty much everywhere, maybe even some commodities too, liquidity, but except probably gold, because everybody's going to continue to think that this means we're going into some major credit default. We've heard people talk about it. People say, it hasn't happened. When is it going to happen? It could still happen. So watch these junk bonds, because that'll give you your clue.
All right. Well, Mish, I'll tell you, that I have a feeling that in the coming months we're going to hear that nasty S word a little bit more that we talked about when we first came on. High prices, lower growth, slower growth, stagflation might be the term. And Tony said something which is really interesting. He said, "I hear the same advice every 10 years or so, and it's always burned me." Well, you know what that means, Tony, and Tony's a valued and daily listener here on the F.A.C.E show, is that maybe you need to find people like Mish to be listening to find those individual names versus maybe somebody that you've been listening to in the past. So Mish, tell us a little bit what you do at Market Gauge there in New Mexico.
Well, my official title used to be Director of Trading Education Research, but it was such a mouthful, we changed it to Chief Strategist.
There we
So,
go.
yeah, but I still write. I really am into education. And so I teach. I mean, I teach through obviously my dailies, through my media appearances, through interviews with you guys, which I've been doing for years, and I love you guys. And I'm sorry that Dale wasn't here today. Please say hi.
I will. He'll be
Um,
back.
yeah, I also co-manage our asset management company called MGAM. So we actually have all these blends that we have created, algorithmic models that really basically run the gamut from GEMS, which is global economic macro, to sector rotation, to large cap leaders, small cap leaders, et cetera. And then you get a blend, and you can either buy the subscriptions or you can give us the money and we'll run it for you depending on your appetite for risk. So I'm kind of all over the map. I try to trade. I do discretionary trading. We have a membership where people come and coach with me once a month and get some of our products. And I'm easy to find on Twitter, and I like to help people. And so if you ever have any questions at Market Minute, just find me and ask me, and I'll be happy to help you.
Well, Mish, I'll tell you, it's always nice and very much a pleasure to meet with you. And I know we met probably about a month and a half ago on Trader Summit. And I'll look forward to reaching out to you very soon. Appreciate your you always spending the time with us. And I know our traders really appreciate it as well. Get some really great comments in the chat. So Mish, have a wonderful day in New Mexico. Wish I was there to see you this weekend. I won't be, but I'm sure your weather is going to be better than ours. So
Well, let me know when you come the next time. Love to see
We'll
you.
do. Well,
Okay.
thank you, Mish. Have a great one. And thanks everybody for listening in here. Make sure you guys get involved with ForexAnalytix, and thanks for tuning in to F.A.C.E. We'll see you tomorrow morning. Tomorrow morning, we are going to be covering the PCE live right here and the instant market reaction. So we'll see you there. Mish, stay well.
Thank you so much. Bye. And thank you, everybody.
Bye-bye.